Back by popular demand, guys. It's your boy Bruce Wang, and in today's video I got another update to the portfolio. So we are sitting at $45,267. We are almost halfway there to $100,000. So I've been thinking, how far can I take this portfolio? How much can I show of me just keep buying individual stocks, ETFs, and just keep growing this portfolio? I was thinking maybe I could stop at 100,000. Let me know what you guys think in the comments below, and drop a like if you haven't already. So this is an all-time high for my portfolio. I've never had this much invested in stocks in my entire life. And let's take a look at the dividend income that I'll be receiving from this year. 1,856 divided by 12. And I'm sitting at $155 on average every single month. I'll be receiving dividend from this portfolio. So if you guys have been there since the beginning or somewhere close to the beginning, you guys know that I started at zero and I've slowly now grown this over the last year plus now. And every single week I update you guys with exactly what I'm buying, what I'm doing to the portfolio, what I'm selling, and all the different changes that's going on in the stock market, in the economy. And man, do we live in a strange and crazy time. So like I said, I've only been investing for a year plus now, and I've never went through a recession while being invested in the stock market. I was alive for the last crash in 2008, but I wasn't invested during that time. I wasn't invested in real estate or anything like that. So this is all brand new to me, as it is to a lot of you guys as well. So hopefully you guys are all safe and, you know, doing some side hustles or something to try to make a little bit of income so you can keep surviving for another day. So first thing on the agenda here is I want to give you guys an update on the stimulus package. Most of us are going to be receiving $1,200 from the IRS. And I think the number one place to get your information is going to be from the IRS website, or you can even follow them on Twitter. Yes, the IRS has a Twitter. Who thought that these guys were so hip? So make sure that account has the blue check mark and IRS news, because there are a lot of scams out there that's going to be going on because of all this stimulus package and disaster relief and stuff like that. So this is where they update you guys to the hour with what is going on with everything that's going on. And another great place that you can just go to is the old reliable IRS.gov website, and just go into the news section, and here you will find the latest updates to your stimulus package. So I've been seeing so many stimulus update videos, and basically every single time I see a video, I go check my bank account and there's nothing in there. Let me know if you guys have the same problem, because it's been taking a long time for me to get mine. And supposedly everybody is supposed to get, a majority of people are supposed to get their stimulus package on Wednesday, which is tomorrow. So, you know, I'll just check back again. One thing I want all you guys to do is make sure you don't fall for any tax scams. You know, during this time, there are going to be a lot of people in financial trouble, a lot of people that are scared. And when you're scared, you do a lot of crazy things that you wouldn't normally do. And make sure you follow up on this, because these scams are getting more and more sophisticated every single year. I get so many emails asking for personal information, for my social security codes and all that. Do not give out any of that to anyone. Just make sure you keep that as safe as possible. So hopefully that intro was not too long. So let's jump into the Robinhood portfolio. My account is sitting at just under $19,000. We are going back up. This last day was pretty good. We are 2% up on the day, 7% up on the week, 12% up on the month. What a crazy month we've had, man. For anybody that just started investing in the last 4 weeks, you guys came at one of the most craziest times, and basically you guys probably think you know it all already, because whatever you bought, you're already going to be up 5, 6, 7, up to even 10% on whatever you bought. But that's not going to be the case, because there is still a long way to go. There's record unemployment. The economy is still at a standstill. Everyone's still in quarantine. All of these companies are going to be coming out, cutting their dividends. So there's still a long way to go before we're going to see any bull run like we did 10 years ago. But if you're anything like me, you're going to just be dollar cost averaging every single week, which basically means you're just going to be consistently buying high quality dividend stocks or whatever you choose to invest in. So when it comes to my portfolio, there's still a long way before I see green on the all-time chart here. I'm 7% away from breaking even, and we're going through it right now. We're just going through it. So as a dividend investor, let me update you guys with some of the dividends that I've been getting paid out over the last few months here. AT&T is one of the biggest payers in my portfolio. On May 1st, they're going to be dropping $25 into my cash accounts. Cisco, $3.60. CFL is basically a non-factor here. Realty Income will be giving me $12 in dividends, but I've been buying a lot of Realty Income. It should be closer to $19. I should be seeing that for next month's payment. Moving down the list here. One thing about AG&C, they just recently cut their dividends, and this is not a very big surprise to me. I've kind of expected this, and there is, I'm not going to be surprised if a few more of the stocks that I own will be cutting their dividends, but a majority of them, over 80% of them, will most likely be pretty safe if things get better, and if things get worse, then you know, that's just how it goes. So all of the dividends that I receive goes back into my cash account where I can just do whatever I want with them. And basically I just reinvest that. And one feature that's brand new with Robinhood is the drip feature. I do not have it turned on. I just kind of wait until I accumulate, you know, $10 to $20, and every single week I'm already depositing around $300 every single week, where I invest that into my portfolio again. So I kind of just wait for everything to come in and then do one main purchase every single week. If you guys want to activate your drip feature, just go into the investing tab here, scroll down all the way to right here, and you can edit your dividend reinvestment plan. Very easily to turn it on, and you can choose whatever stock that you want to reinvest into. And for me, I'm going to stick with it turned off. So this week I bought 4 different stocks here. I bought $100 worth of Apple, $100 worth of Coca-Cola, $100 worth of ExxonMobil. I'm still trying to get my average cost of ExxonMobil as low as possible. And I bought $17 worth of PSEC. And with that comes to a total of $317. And I basically increased my annual dividends by around $15.50. So over the last few weeks, I was targeting Realty Income really hard, trying to just load up on as much as I can. And right now, Realty Income is up like 10% over the last week plus 2 weeks. So that's why I'm kind of hesitant to just keep going into Realty Income. So I was looking at some of the other stocks that's in my portfolio that I haven't been giving too much love to, and that's why I decided to buy these stocks this week. Before we jump into the M1 Finance portfolio, if you guys want to see my most up-to-date stocks and in my entire portfolio, links are going to be in the descriptions, and all the free stocks and free goodies are down there as well if you guys haven't signed up for anything. Let's jump into the Wang Gang portfolio here. We are sitting at $14,805. On the day, we're up 2.69%, 69%, and $387 in the last week. Again, it's been a crazy week for everybody, up 7%. In the last month, though, we are at 5%. And on the month here, I earned around $45 in dividends from M1 Finance. So that is pretty sick, if you ask me. Let's take a look at the activities chart to see exactly what I bought. So when it comes to M1 Finance, I invested around $600 into the portfolio. So this week I did something a little bit different. I narrowed down exactly what I want to buy versus just letting M1 Finance do their auto invest for me. My biggest purchase was into Visa, where I bought $125. Amazon is one of those companies that's going to, I think, do well over the recession. I'm still using Amazon almost on a weekly basis, just ordering stuff that I think I might need. Mask, cleaning supplies, disinfectants, hand sanitizers. They're still available if you're able to purchase them right when they get listed. So I'm always on Amazon just looking for stuff like that because I have a lot of family that are entrepreneurs. They run their own business, grocery stores and whatnot. If you guys follow me on Instagram, you guys can kind of see more in depth up to like what entrepreneurial stuff that me and my family are doing. So that's why I'm buying stuff like that for them. I'm trying to keep them safe during this crazy time. Another big purchase that I made is into McDonald's, and all of the other stocks are from my Dogs of the Dow pie. So if you guys want to start dividend investing, M1 Finance or Robinhood, they're both great choices, but I kind of lean towards M1 Finance nowadays, and that is why I'm investing over $600 into M1 Finance every single week versus Robinhood, where I'm only investing around $300. Links are going to be in the description if you guys want to get the hookup there. So let's jump into some Q&A. Last week, I posted a video about my top 5 performing stocks versus my worst performing stocks on from my Simply Safe dividends. I have to really tell you guys what I'm using all the time because the questions I get are pretty simple, and they could easily be found out if you guys just watch the video. But anyways, this week's top performing stocks is a lot different than last week's, and Tesla's up here, Apple, Amazon, Microsoft, and Intel. Last week I think it was completely different, but Tesla has been on a tear. We are seeing like 35% gain, which is completely insane, man. I have no idea. I have no idea who is buying Tesla cars right now. Maybe in China, everyone's buying a Tesla car or something. And when it comes to my worst performing stocks, it actually looks exactly the same as last week. Boeing, PSEC, AGNC, SPHD, and ExxonMobil. Man, I really need to get my average cost down on these stocks here. So Morgan P is asking, have you sold any of your stocks? And yes, on my M1 Finance portfolio and Robinhood, I've consolidated it pretty heavily over the last few weeks here. I've sold LTC properties, which I was invested over maybe $2,000 in there. I sold that for realty income, and I also sold some of the stocks that I found I was too overexposed into some of the sectors. And if you guys want to watch that video, you guys can go check that out here. I'll put it up in the cards. I kind of explained it there as well. So Stock Investment Analysis is asking, it's great seeing that income climb. I'm assuming dividend income. How safe do you think PSEC's 16% dividend yield and overall financial health of the company? So when it comes to PSEC, I already explained in many of my other videos, PSEC is a very speculative play for me. Their dividend safety is very low, it's at 30%, which basically means that they could cut their dividends at any time. And dividend yields is at 16.35%. And one thing I want to mention is that if you're trying to invest into something that's very risky, make sure that it's a very small percentage of your entire portfolio. When it comes to Prospect Capital, it is less than 2% of my entire portfolio. So even if PSEC decides to just chop off their entire dividends and stop paying their dividend, it's not going to be too bad of a hit when it comes to my annual income. Only $126 would be lost, which is probably less than 5% of my entire dividend income. So make sure if you're investing for dividends, strictly for dividends, that you're investing in mostly safe stuff. And if you're going to do risky plays, make sure it's only a small portion of your portfolio. So I've been getting a lot of questions when it comes to SPHD, their monthly dividend income, and Simply Safe dividends. So I kind of want to clear this one up completely. So when it comes to SPHD on Simply Safe dividends, they do not have a dividend safety score because it's an ETF. And I think that's one of the main reasons why they can't really calculate an ETF, because ETF is holding a basket full of stocks. And if you guys want to know each individual stock's dividend safety score, you would have to go into their holdings and look up that individual safety score of that stock. So one of the stocks that are in Invesco is AT&T. And that's kind of the workaround for that. But basically, SPHD does pay a dividend every single month. And on top of that, I think that the dividend safety should be relatively high because all of the accounts, all of the stocks in that ETF are pretty safe. If you guys want to know more about SPHD, I'll leave a link in the description for you guys. But basically, This is from their official website. Scroll all the way down here on the portfolio and you can see the top holdings here: Iron Mountain, Altria Group, Philip Morris. All of these dividend safeties on all of these companies are borderline to safe, and some of them are even very safe. So go check out the website if you guys want more information about what is in SPHD. And if you guys want to watch more videos from me, go check out these videos here. If you guys want to cop one of these hoodies, go into the links in the description, is down there as well. Don't forget to like, subscribe, hit that notification, and I'll see you guys in the next video. Also, if you guys want more content, go check out my second channel and my Instagram. I update that pretty much daily. And again, free stocks in the links in the description as well. And I'll check you guys out in the next video. Bye.